Thanks for joining us this evening. You're on Squawk. I'm Bruce Whitfield on CNBC Africa, first with Business Worldwide. In the next 30 minutes, we'll dig into the latest financial news and market stories. Joining me on the hot desk, David, not one but two Raging Bulls Shapiro from Sasfin and Viv Governor from Punani Private Clients. No Raging Bulls at all, but that's okay because we need the big bull to contain the Raging Bull. Mining Indaba, thank goodness it's over, but what a dull thing it's been because the focus, David Shapiro, seems to have been on everywhere but South Africa.
Well, that's Africa. The whole theme is about Africa, and there's 7,000 delegates who go there, and I'm not quite sure that they all go for simply to listen to what has to be said. I think there's a lot of partying in Cape Town. Couldn't get a flight back yesterday. They had to put on one of these new big flights. But it does have some impact. I think that there's quite a bit that comes out of it. It's like Davos. It's a one-day or two-day wonder. We don't even talk about Davos, although some of the channels that on TV, you have to go repeatedly through some of the, the panel sessions that they have. So I hope it doesn't happen with the Mining Indaba.
Okay, well, just very briefly on the Mining Indaba. Susan Shabangu, the Mines Minister, is saying one thing and very publicly saying we welcome investment, we want everybody here, we love everybody, but there's a raft of legislation going through, and I was talking to Peter Leon about it just this week, and he's saying it gives too much power to ultimately the Resources Minister.
And I think that's the worry. And that's something that are keeping companies away. A lot of that's keeping investment out of South Africa. If the government's got too much power, and we saw them trying to flex it with Anglo Plat. If you don't do what we want you to do, we're going to take our mining rights away. You can't do those kind of things.
I want to pick up on that theme in just a moment. But what's your reading on it?
Look, I mean, there's plenty of places in the world you can invest in the mining sector. We may be at the end of a massive bull run that we've had for multiple decades now in the mining sector, in minerals, etc. As China shifts from being a very low-income country to a middle-income country. Whenever you have that shift, you always have a drop in the amount of raw materials you need. An iPhone requires less raw materials than a bridge does, let us say that. So there is that possibility of being at the end of a bull run. At the same time, our mining minister, our government wants to go in and actually increase taxes, make it more difficult, make it more onerous on mining companies to start, actually investing in the country. What's going to happen? You're obviously going to have a switch away from South Africa to other parts of the world. You
touched on last week this idea of borderless countries, where companies are borderless environments. Yes. They go wherever the opportunities present themselves.
And there are plenty of places to go. I'm looking at America at the moment, where they mining natural gas, tapping natural gas. And the opportunities are so intense there. And here you have a country where legislation helps, where there's regulations, where there's skilled labor, etc. And you say, hold on a sec, if I've got a chance of going to America and putting my investments in a country like that, which is now going to start expanding quite rapidly in that particular energy field, why do I have to go to an emerging country where they want to tax me more? Just have a look at, talking about that, have a look at Julia Gillard now. Lost complete control of Australia, likely to lose the next election. She was the one with, we've got to mine, we've got to more and more taxes, etc. And that's a danger. Countries try and tax the super profits of miners instead of allowing the miners to grow, to benefit, and add and contribute to the overall economy.
David mentioned Anglo Platinum earlier. But Anglo Platinum's results coming out this week, giving a very clear indication that last year was not a happy year. First time ever in its history reporting a loss.
Yes, and the thing is, if you just look at the situation the company is facing right now, those 14,000 jobs. Okay, maybe they put the 30% that they say are now going to be redistributed to other parts of the company, etc., are probably destined to go. There's nothing much you can do about that. I think, in fact, looking at just what the investment, history of the company has been in those particular shafts, the lack of capex being put in, etc., it probably means that maybe the rest of the miners that are around that area are also going to be suffering. Maybe looking at the 6,000 jobs in the future that also has been taken away. And that's just due to the fact that the company is not investing in those mines at the moment. It doesn't see a reason to. It's not making a profit, so why would it?
Yeah, absolutely.
I think the big story we have to watch out for is the one Rio Tinto now in Mozambique.
Because Rio Tinto has basically said to the Mozambicans, look, it's not worth our while. Cheers.
That's right. So what does the Mozambique government come in? Please don't go. Why? Because economic value would have been added, jobs would have been added, and each job has a massive impact on the rest of the economy. It grows the economy. Now, don't worry, you can sail boats down the Zambezi and down to port. So that's what they should be saying from the start. What can we do to make Riversdale work? What do you want from us to make it work?
Yeah, I mean, you look at, for example, at Anglo Platinum, which had a horrible second half of last year. The gold sector didn't have a much better second half than last year, but somehow Harmony managed to pull a trickle.
Yes, great result from Harmony. The other one was Lonmin as well, who came out with a result which staggered us. I saw Royal Bafokeng today also down, down quite dramatically on the same considerations. We have to look at the platinum belt now, because that's our savior. That's going to be the one area that can create jobs, and we have to view it against increasing demand for motor vehicles worldwide. I don't know if you've picked up on that, but certainly China's starting to buy, and hopefully Europe starts to stabilize and we see a slight pickup there. So we have to be well positioned now for the next leg of the commodity boom.
But even in South Africa, Viv, 55,000 new units were sold in South Africa, motor vehicle units, lots of motor cars, lots of trucks, lots of buses, those sorts of things. 55,000 units. This is pre-2008 crash stuff.
Yes, but I think that's probably due to the fact that the rand is weakened, and any logical consumer says most of these things are imported, the rand's weaker, if I don't buy now, prices are going to go up. I think that's also what's pushing them forward, and we have the lowest interest rates we've had for decades. So quite frankly, that combination of in the future prices are going to increase and interest rates are low right now, made consumers go. I think we might have a bit of a pullback later in the year as these higher prices come through to the weaker rand. But obviously, that's a very good number that we had in the last period.
I've just been talking to a couple of estate agents recently. I like to keep track as to what's going on in my area, and suddenly people are going a little bit mad on property as well. There's a very clear prickle in the air on property. But why? I don't know.
You know what's happened, and in fact, why I'm so bullish about the market into the new year is that so many people have been on the sidelines waiting for the global economy to fall in an abyss, waiting for America to fall over the cliff, waiting for the euro. It hasn't happened.
Not yet.
Well, it hasn't, and it's unlikely to happen. They'll bumble through. No one's getting bullish. But I think you start to feel more confident. Your stock market, your pension fund, everything's going up, so you feel you've got more money, you go out and spend. And in fact, the essence of Bernanke's policies were to keep interest rates low and to help markets pick up.
Precisely to create this kind of environment.
Exactly. And when you feel good about yourself, when you feel that there is a bit of a future, you go out and spend and buy a house.
And maybe you just feel you're tired of feeling lousy.
You're tired of living with your mother-in-law and father-in-law. Go buy your own house.
Okay, I will. So from new car sales onto airline traffic, and you look at these sort of numbers that are being reported. Mango, which never discloses anything other than, boy, we're wonderful and doing so well, is one thing. But Comme actually comes up with proper numbers and says that the world without one time is a much happier world for them. But you're talking about just how tight the airline seats are at the moment. Do you want to be buying Comair now?
I'll never buy Comair or any airline.
Brian Joffe did. He bought 26%.
I know. I don't understand, because there's always something that I avoid that, and I avoid agricultural companies, as we've seen with Astral, as we've seen with Clover. There's just too many moving parts. There are too many input. It's too difficult to understand. Is the wheat price going up? Is it going down? Is it going to rain? Is it not going to rain? And the same thing with airlines. It's so difficult. Are travellers coming?
Rather buy the cheap tickets. Get your tax rebate by flying SAA.
They subsidise you. You're paying tax. They're subsidising you. Fly SAA for you. Comair will kill us. But I mean,
I was having a chat with Cheryl Carolus this week as well, the former chairperson of SAA. So have you got your BA frequent flyer card? And she said no. She remains an SAA loyalist, despite the fact that she had a big fallout. I thought that was a nice.
Well, I've got to tell you a story. In fact, is that once we were on to XCOs, I bumped into Kaya.
Kaya Nkula. Yes, and hard to miss.
Yeah. I asked him if he's unemployed still. He said yes, because we've got a job to go and sell my fund, I'm looking for a unit trust salesman, which is how he started,
Did he?
Yeah, down at Norwich Union. He was pretty good. He's pretty good. But he told me a story. He said, that he's still very nervous because he laid off people at SAA. There's still a backlash. And he says, this is a country where you dare not lay off people. It's quite interesting to hear him saying that he still gets, I wouldn't say death threats, but still...
He feels uncomfortable.
Uncomfortable about it. It's a nice way to put it, about what he did there.
So,
yeah, that's why I'm saying it's such a difficult area when you do lay off people. It seems to...
Welcome to sunny South Africa. Please don't lay off anybody who works here. Talking about troublesome industries, we've seen wage increases coming through across the mining sector. Just this week we've seen the minimum wage in the agricultural sector raised from pitiful to slightly less pitiful of 105 Rand a day. David says he doesn't like asphalt, he doesn't like clover. Possibly that's one of the reasons, David, but Viv, would you go for an investment in the agricultural sector, looking at the sort of inflation that these players face?
Look, I do think that, yes, you are having issues with regards to labour, etc. In certain industries. I mean, you can't get a machine right now to go and pick strawberries or pick grapes. It's just the technology isn't there. Maybe in a few years' time it might be, but right now, so you see when you have the layoffs coming through, it's not going to be in the wine sector, and it's been in other parts of the country like the dairy sector, etc. But with regards to the food industry as a whole, I do think you want to be in there. One of the things that's strange about people is that as they get wealthier, they actually use calories much more inefficiently. A poor person will take the thing straight from the ground, use the entire calorie of the plant, and for his consumption, the rich person will go and take the plant, feed it to an animal, and use a fraction of the calories from the animal for him, from the plant eventually for himself. And this is something we're going to be seeing going forward. Agricultural demand will be increasing over time beyond
agricultural demand increases, but the farmers are the price takers. So the farmers are absorbing all of this inflation. They will take whatever price the market gives them, and that may be a slightly inflated price, or it may not be, David, which is why people prefer to go into the manufacturers and the retailers.
I'm worried about the manufacturers. I'm worried that they will not be able to pass on the huge increases in cost to the consumer. There's a limit, and even though I like Famous Brand, I like taste, I wonder how long Spurs, for example, they can continue to keep those margins going. They've got to increase revenue inside, in other words, consumption. But I would expect the margins to narrow. And I look at Tiger Brands. Despite all the Dangote stories and going up to Kenya, if you really look at the accounts, it's still a bread company. It makes Albany bread or something, and it sells that. And I'm concerned that margins are going to be squeezed there as well. They're already facing competition. Pioneer, I would imagine the same story, and other food manufacturers as well. So I'm on watch for those companies. I know they're going up on the story of going into Africa, but actually it's going to be interesting to analyze what the accounts look like next time
20 years ago, I think a Spur Goodie Burger, when I was a waiter, it was about R6.50. It's 10 times higher than that. So far the price increases have come through very, very nicely for them. A couple of companies that you really don't like, David, Sappi and ArcelorMittal.
I told you, not to be mentioned.
Okay, we're not mentioning Sappi, we're not mentioning ArcelorMittal, we're talking about investments here. Vodacom and MTN, then you're a big fan of Vodacom, aren't you?
Yes, I am. I think the results that came out were looking a bit scary for some people because the voice revenue was falling, but this was expected. I mean, voice is going to be a declining sector for every mobile company in the world. What's going to be the new thing? Phones nowadays are not just phones, they are mini computers that have a phone component. And if you look at the equipment sales that they had, the huge improvement in equipment sales. Why? I don't think it's because of units, I think it's more likely it's because more smartphones are being purchased. And as we look forward, 5-10 years down the line, we're going to see a revolution in telecommunications that was bigger than anything we've saw in computers. More people are going to have smartphones quicker than they ever had computers. And this is going to be a thing that's going to change the world, I think.
But you see, David, I buy all of those arguments. I really do. They trade on multiples of around 13, 14 times. These are not expensive shares. No. But why do I feel, maybe I speak to too many techie people who resent the price they pay for the technology, because I just see downward pressure coming through on the for the cell phone providers. Right. They've got to charge less and less and less.
They will charge less and less and less, but more and more people will use data. It's not growth anymore. And that's where you're right. It's a utility, and a nice utility that's going to provide you 5-6% dividend yield. Buy it for that. So that's, I think, on that. And yes, that will keep pace. So you're going to get a nice return out of them. But if you're looking for the mammoth growth that we saw a decade, forget about it.
Yeah. Where do we get the mammoth growth? The cell phone type growth in this market? Where is there anywhere? No. Is there anywhere?
I think the world's becoming saturated. It's now a matter of utilizing that base, and I think Viv is right. There are going to be smarter toys that are going to come out, which are going to require smarter data. Everything is going to be handheld now. It's all Wi-Fi. That's why Dell is going private. The desktop is obsolete. It's going out of fashion. It's gone. So everything is going to be, and you're going to get more and more on your handheld or your iPad, mini iPad, whatever it is.
I think we should invest in optometrists, because you get better glasses to read.
It's absolutely awful.
I mean, look at Google Glass. It's basically a pair of glasses that actually beams the thing into your eye, almost, so you can actually have like an overview of the world plus information. So you watch a match, it's a cricket match.
You think I'm listening to you right now? No, I'm watching TV on the inside of my house.
Yes, exactly.
Well, I've learned to do that. You know, my wife can talk to me, and I can watch TV right through.
You know she watches. Shame, we're going to miss David.
Yes, bad walking.
We're going to miss him. SAB Miller investing in China, another nearly billion rand deal, $1 billion deal. It was huge. $864 million, nearly $1 billion deal in China.
This is big.
Yeah.
You know, it's big. I know it was just one line statement that they made, but I think if
in
you
our world,
analyze
this is nothing. But this is $1 billion in China,
big, and China,
a statement of intent.
You know, Viv said that as people go up the chain, they start to, you know, they're not drinking rice water anymore. Now they're drinking fancy beers. And it's a huge growth area as well. And I think SAB are very smart. They've got a very good joint venture there. So I think this will end up being bigger than just a, you know, casting aside, they've done another deal.
But that's it. And there's also, there was a reading between the lines of the statement, and you've got to do that with SAB because they write blooming clever statements. You've got to interpret what they're doing here, and this isn't just a once-off. This is a consolidation now, possibly, of the Chinese beer market. They've done Europe, they've done large parts of the world. Now they're going to consolidate China.
There's two basic places in the world that they haven't really got, like, you know, they're not really winning, quite frankly. It's America and it is, you know, in China. And in China, I think it's a place in which, as the incomes are growing, people are going to shift towards more Western desires and more Western wants. Things like, for instance, beer, wine, etc., are going to be growing in that market here. It's probably aspirational. They actually paid a premium for the company they bought. Well, I think it's because of the brand it got. It was distribution. Quite a good brand, good distribution with MT, which goes with SC Breweries, great management, and in the history of managing different operations around the world here, it's probably going to be a win in the end.
I think take the famous brands, for example. I mean, we're using this SAB Miller is substantially higher. What are famous brands doing now? Vertically integrating. In other words, they've got all the chains and food stores, but now they're doing centralized buying, centralized distribution.
Where was Kevin Hedwig trained?
At SAB. And that's what they're doing globally with their...
More with David Shapiro from Sasfin and Viv Governor from Vunani Private Clients in just a moment when we return with the contrarian view. It's a bizarre one this evening, the one that will not be a tearjerker, we promise.